Hey, it's Stuart. So Donald Trump's tariffs could actually be positive for the Australian property market. So let me walk you through just a couple of observations that I've made over the last sort of 20 odd years on how share markets, interest rates interact with property market demand and therefore impact property prices in the long run. So the first thing is interest rates. So the market at the moment is pricing in almost 100% probability that the RBA will cut interest rates in May and that there'll be 2 more cuts between now and the end of the calendar year. So therefore about a 0.75% reduction in interest rates, so 75 points, which will take the cash rate down to 3.35%. And the RBA estimate that its neutral cash rate is somewhere between 3 and 3.5%. So arguably based on their data or analysis, that would be set at a kind of neutral level. Interestingly enough, the 3-year government bond rate is about that level. So essentially the market thinks 3 cuts this year and then no cuts beyond that. So that's kind of an interest rate setting. Now, we know that interest rates, decline in interest rates will increase borrowing capacity, affordability, cash flow, all those sorts of things. And that'll probably likely mean more money flows into the property market, and money flows are a really strong predictor of future price growth. So that's a positive outcome. Now, because of Trump's tariffs, I think the probability of interest rate cuts are higher rather than lower. So I think Trump is actually helping, at least from solely just the interest rate perspective, helping that case. The second thing that I've noticed over the last 25 odd years since starting this business is that when share markets are very volatile and perceived as risky, property starts to become a better alternative investment. So a more attractive alternative investment, I should say. Now, I'm going to put aside, whether that's true or not. It's just really from a investor sentiment perspective, that is true. Now, of course, share markets over the last 5 years, even 10 years, particularly in the US over the last 13 years, has been incredibly strong performance, double digit, about 13% compounding returns or something like that. So really strong performance, but comparatively over the last decade, Australian property hasn't done a whole lot. Yeah, sure, Perth is really kicked off. Brisbane's probably been the best market over the last 10 years, but even then it hasn't shot the lights out. Now, if the tariffs and what Trump is doing in the US causes more volatility, I expect it will, and therefore, and have a negative impact on returns. So if share markets can't continue, and particularly US market can't continue at that pace, then I think relative returns will change. So property will start to look like a better alternative, but more importantly, property will start to look like a safer alternative. So it's really uncertain, of course, Trump's announced these tariffs, whether they're going to be actually implemented, whether they're going to be permanent, or whether it's just a little bit of rhetoric to negotiate better outcomes. No one really knows the answer to those things. But I just wanted to record this video just to share my thoughts that actually, we look at this as a negative, and there is a lot of negativity around it, of course, but purely just from a property market perspective, I think what has occurred and what's likely to occur with interest rates will ultimately be positive for property. Anyway, just wanted to share those insights. I hope they're worth listening to. Thanks.